Introducing IC Vision.
Coming up with your very own long-term investment strategy can be a lot of fun. With the help of this tool, you will discover that there are these productive stocks out there. While performing well on their own, they will have almost a chemical reaction when combined with each other. It can be very surprising how much better these chemical reactions can perform. So let's take a look at a quick example. I'd like to show you Apple Computer, which is the symbol AAPL. The program quickly loads the entire history of Apple Computer, and we are looking at its 365-day or yearly returns. And the green areas here show when Apple is making money that year. And the red areas are when it's losing the money. I like to tell the program to invest $10,000 for me. So I will go into the goals section, hit the plus button, and the program by default will put in $10,000 for me. Now I'd like to take that $10,000 and time travel with it into the past, into the 1990s, specifically to 7,030 days into the past. And I'd like to show you this specific scenario. Now we start out with $10,000 and the money grows throughout the years with this picture. As you can see, it's a very stagnant performance. In fact, at some point, Apple Computer seems to lose almost half of your money in 1997. Towards the end, on January 7, 2010, we end up with $295,000. Now let's change the stock to Family Dollar stores. Now, immediately the picture up here changed into something significantly more performant. In fact, at some point, the Family Dollar stores is producing over $400,000. In the end, we're ending up with around $328,000. Now, you may say, well, clearly Family Dollar stores is a better performer than Apple. So why would I need Apple at all? Well, here's the reaction that I'd like to show you. I'd like to add Apple right next to Family Dollar stores. AAPL is their symbol. And I would like to tell the program to invest 50% into each and maintain this mixture for the years to come. Now, immediately you will see the reaction up here, and let's go examine it. We have $750,000 on January 26th of 2010. Which is more than twice what they did individually. Let's look at what they did individually. Family Dollar stores is around 323. Apple is around 295. And at 50% of each, approximately 50%, we have over $700,000, which is more than twice. This reaction is the basis of what is known as the modern portfolio theory, which is a Nobel Prize winning method of investing. And this tool is built upon some of these principles. As you can see, looking at the gains and losses of Apple, where you see green in the Family Dollar stores, there is red on Apple in around the same time. Conversely, where there is red on Family Dollar stores, there's green on the Apple side. So this relationship, green, red, red, green, green, red, this complementary behavior is keeping up for a good 15 years. The historical data that shows this complementary behavior seems to reveal a fundamental relationship between these two stocks. You may hypothesize that when the economy is doing worse, people would like to save money. And because Family Dollar store sells products at a discount price, this stock may profit during these times. While on the other hand, when the economy is doing better, people may be able to afford Apple's higher priced products. So Apple may profit during these other times. You can draw your own conclusions, and as long as Apple Computer and Family Dollar stores continue to do their business the way they have been like this, for 15 years in this case, they will likely keep up this synergy into the future. Let's time travel to some other periods in the past. I like to take the $10,000 and move it a little earlier into the past. And immediately you're seeing that now we're performing worse. We used to have over $700,000, and now the outcome is right around $400,000. And this is simply by moving back by about 120 days further into the past. We are now catching this approximate 30% loss in the beginning. And even though we're giving more time for our money to grow, this loss in the very beginning has a detrimental effect of about a $300,000 reduction at the very end. As you can see, the point to which you will time travel to will have a significant impact on the lesson that can be learned from that period in the past. So it is important to study the lessons from many, many different time travels in the past. In fact, why not all of them? That's what this program does on the right side with this graph called the reflection graph. So when I move my goals into the present, and they extend into the future, the program will automatically take all these goals and time travel to every single possibility into the past automatically for you. And these time travels in the program are known as retrospections. And in this case, there are 8,120 of them. Those retrospections are combined into a single picture known as this reflection graph. The white areas in this reflection graph show you the solid evidences found. In this case, when I point to $234,000 in the year 2028, which is 18 years from now, there are 1,238 evidences found of making higher than that amount and 0 evidences found of making less. These are evidences found from the past. All the evidences from the past are combined into a single unified picture called the reflection graph. And even with this picture, if I were to go all the way to Family Dollar stores, you will see a reduction in the synergy, and all the way to Apple. Again, Apple has this very stagnant performance throughout the years, and finally towards the end it seems to catch up. And when you combine the two, we have that special synergy again. Not only does the performance come earlier, but the ratio of evidences are more solid leading towards the end. You can use this tool to safely study and consider the many creative recipes of your own. As you discover your own chemical reactions, you can quickly gain insight while preparing a plan for your own future that has minimum risk and optimum performance. Tools like these can free an investor to gain independence, to save on costs, and to come up with strategies that are better than the status quo.
IC Vision is free for personal use and is available for download at icinvesting.com.